Ladies and gentlemen, good day and welcome to the Sandhar Technologies Limited Q3 FY26 earnings conference call hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Chirag Jain from Emkay Global. Thank you, and over to you, sir.
Thank you, Huda. Good morning, everyone. On behalf of Emkay Global Financial Services, I would like to welcome you all to the 3Q FY26 earnings conference call of Sandhar Technologies Limited. Today we have with us from the management team, Mr. Jayant Davar, Executive Chairman, Director and CEO, Mr. Neel Jay Davar, Director, Mr. Gurvinder Jeet Singh, Whole-Time Director and Head of Corporate Strategy, and Mr. Yashpal Jain, Chief Financial Officer and Company Secretary. We will begin the call with opening comments from the management team, followed by Q&A session. Over to you, Mr. Davar.
Thank you, Chirag. So let me begin with my gratitude to MK as well as to Chorus for organizing this call. Good morning to everyone. It seems we are in good times. From what I understand, and if I reflect on what Mr. Chandra, President of SIAM, said, that 2025 has been a landmark year for the Indian auto industry. The year began a little subdued in the first half, but has picked up in the third quarter. And to give you the good news, the passenger vehicle segment posted its highest ever sales of quarter 3 at 12.76 lakhs. In two-wheelers, quarter 3 again, two-wheelers posted their highest ever quarter 3 sales of 5.7 million. If I look at three-wheelers, again, quarter 3 has posted their highest ever quarter 3 numbers of 2.15 lakhs. Commercial vehicles, again, recorded its highest ever sales of quarter 3 of 2.90 lakhs. So, as we sit here today, of course, these are the final numbers of the OEMs in quarter 3, which meant that the auto component industry was most active in quarter 2 because there is a lag. But what I see going forward is that the outlook for this particular quarter for the auto component industry and even the first quarter of the next financial year for the auto segment itself seems to be very, very bullish as we sit and talk here today. We as a company have very clearly given our investor presentation. I'm sure all of you have a copy. But to give you some highlights of this particular presentation, we've largely divided it into 3 different parts. One is the India operations, which is the existing business. One is the India operations, which are new businesses that the company has added or have taken in terms of the acquisitions. Then there is the overseas business, which again is the third element of this particular presentation. Add to this, there are elements of the EV business, the subsidiaries and the joint ventures. So, to give you a broad side, let me just give you some numbers. I know you have those numbers, but if I look at quarter 3 numbers, our revenue from operations grew by 24%. On a 9-month basis, we grew by 26%. Overseas business, the revenue of operations was down by 0.6, but EBITDA was up by 68%. If I look at 9-month period, the revenue from operations grew by 2%. On a consolidated business growth, quarter 3 numbers, we've grown by 22%. On a 9-month basis, we've grown by 24%. In terms of joint ventures, all the 5 joint ventures have performed satisfactorily, registering revenue of 61.69 crores and total EBITDA is 7.40 crores for quarter 3 and 21 crores for 9 months of the current financial year. Overseas subsidiaries and business, I've already mentioned, there has been a slight decline. But despite the slight decline in revenue, the losses have been cut down to 8 crores versus almost 11 crores in quarter 3 25. And the company, you'd be happy to know, has taken many steps to reduce the cost, increase operational efficiency, and expand the customer and product base. We are very, very hopeful that this particular quarter, we should be able to break even, as I had mentioned even in the previous calls. The European markets continue to witness uncertainty, but with the steps that we have taken as a company, I am sure that we will move ahead in a positive direction from now on. In terms of EVs, we've started doing commercial invoicing of battery chargers and motor controllers. We are getting a positive response from the market. So far, we've generated a revenue of 12.18%, which is multiple times of what we had done in the previous year. And now that it's fully operational, we expect that the next full year will dramatically improve over the performance so far. So those are my opening comments. In the call today, there is me, there is Mr. GJ Sen, whole-time director. There is Mr. Neil Dawar, and there is Mr. Yashpal Jain, who is the CFO of the company, who should be able to answer all your questions regarding any kind of numbers. What has happened, what is likely to happen are things that he would be able to take on very comfortably. With that, I open the conference once again with a big thank you. We're happy to take your questions from now on. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya from Complete Circle Capital. Please go ahead.
Hi team Sandhar, congrats on a great set of performance. My first question was on the margins, if you can just give any outlook on that. And number 2, in the EU or any other geographies abroad, are you looking at any more acquisitions? Thank you.
Aditya, thank you for that question. Just to give you a broad side so that everybody also understands, like I said, we've divided the presentation into 3 distinct parts. On the existing business, the revenue has grown by 14.5%. The EBITDA margin has gone up from 10.5% to 11.9%. The EBIT again has increased. And the interesting thing is that the ROCE annualized for the existing business has gone up from 16.3% to 21.1%. So there is a distinct improvement that is happening in every segment. If I look at the new projects, the new projects are obviously very, very small. In terms of revenue, we have gone up from a revenue of only 2.74 crores to 305 crores in the 9-month period. The EBITDA, which was minus, has come into positive territory. And again, we are very bullish on this going forward. Overseas business again, while the revenue has gone up only by 2% in this 9-month period, we do believe that this last quarter will be the turning quarter for the company in terms of negating any negative numbers that we were getting so far. Yashpalji, in case you could come in and explain this a little more to the satisfaction of Aditya.
Yes, sure, sir. So like Aditya, if you see the figures, basically the 9-month figures, if we say we have a cumulative loss of 25.81 crores in the overseas business, which is partly on account of translation losses, partly on account of the operations. But now the effective measures have been taken. So going forward, starting quarter 4 of the current financial year and quarter 1 of the next financial year, this would be turning to positive. So if we consider the coming financial year, this negative contribution from the overseas is likely to be eliminated. Similarly, the new projects, which have sustained a loss of close to 24.98 crores, So again, around 25 crores. So taking together 50 crores for both these overseas as well as our new projects. So new projects are also showing a healthy sign of turnaround, which is apparently visible from the improvement in EBITDA level also. So starting from April 26, these projects will also turn around. So gradually the margin should go up.
And sir, any color on any acquisitions or any potential targets that you're looking at?
Well, Alter, this is an ongoing process. If any good opportunity comes up, we keep on evaluating. But if it fits into our parameters, then only we pursue the same. Otherwise, we don't pursue it. We have set some internal parameters in terms of financial and operational evaluation for the target entities. And unfortunately, for the last 1.5 years, we have been in touch with many of these opportunities, but none of them could fit into our parameters. So we are on the lookout, but at the right time, for the right opportunity, we might go for it, depending on this. Many factors.
So, in simple terms, Aditya, there is nothing on the table today. If there is something that were to arrive, which is very, very exciting, we are open to pursuing it. Is all I'm going to leave you with.
No, that's cool, sir. Thank you.
Thank you. The next question is from the line of Aniket from CR Kothari and Sons. Please go ahead.
Thank you for the opportunity. First of all, congratulations and great set of numbers. My specific question would be regarding to the previous guidance.
There is a lot of disturbance from your line. Can you please check?
Hello? Hello?
Yes, please continue.
So, my specific question, first of all, I have two questions. The first one will be regarding the previous guidance which was provided in the earlier calls were about 30-40 basis points improvement in the EBITDA. Was it including other income or excluding other income?
There is a lot of background sound for us. Can we? Yes, Palji, you want to take that question?
Yeah, sure. I was just waiting for the second question also. If you can put the second question also.
The second question is regarding the currently as India is pouring into multiple trade deals and deals with European countries as well. So I wanted to understand what would be the impact on the companies in product demand and supply side.
Sure. So first question I'll answer. So earlier guidance that we have given to you was excluding this, I would say one-time profit on sale of our one of the existing land parcels in Pune, Bangalore, from which we got a profit of 34 crores. So obviously that is the only extraordinary income you can say, but that plant was a part of our operations and we merged that operation into another plant as a part of our to lean the operations wherever we don't require the larger facilities, or I would say the headcount, the number of the facilities. Secondly, in terms of 30 to 40 this improvement in the margins, yes, we were projecting it, but as we have tried to present to the investors that existing business we are up to the mark that we were expecting to go, except there has been a slight fall in the Q1 that we explained to the investor community during Q1 also, due to disturbances in the productions from one of the OEs and also the slowdown in the off-highway vehicle segment. Apart from that, we are very well on the track that we have guided to the market, and Q4 will be a more better quarter because Q3 has a lesser number of working days. In terms of there is always a closure in the last week of December at various OEs. So Q4 will be the better one, and I think we would be able to improve our margins.
Understood. So, just for the final remark, it would be excluding or including other income?
Whenever we count excluding extraordinary other income, but there are certain regular income which are classified as per the accounting standard other income, but they are part of operations only. So the classification is based on the accounting standards, the Ind AS. But some of these incomes are in the nature of operating income, but they are not classified as revenue from operations. They are classified as other income as other operating income. Yeah.
Understood.
Yeah. So second portion, sir, you would like to reply or in terms of this trade deal with Europe?
What was the second question? Come again. It wasn't very clear. There was a background.
Yeah.
Okay, so I'll remedy. So it was regarding the demand supply for products in overseas markets, as India is getting into multiple deals with just recently EU and the UK FTA as well. So just wanted to understand the total impact on the products of our company. If I can get a bifurcation, that would be great.
To be honest, Aditya, if you look at the entire auto industry and the auto industry that was largely supplying to OEMs, there is hardly any impact, because if there were parts that were going to the commercial vehicle segment or otherwise to the US or to the EU, there were exemptions already in place where the punitive tariffs were not being considered at all. It was only in the case of aftermarket that the impact of the tariffs was felt. So to that end, people who are in the aftermarket in terms of exports, they will probably benefit. We as a company, we are an OEM directed company largely wherever our income from overseas is concerned, whether they are from India or from our international operations. So the impact on us in terms of our current operations is not there. But we do believe that going forward, this would lead to several other opportunities as Europe and America start looking at India for a larger base for supply. But to answer your questions directly as of now, is there an impact and will we suffer or gain? The answer is no.
Okay, thank you for the clarity, sir. I will join back the queue and wait for my chance once.
All right.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Basant Patil from the Wealth Company. Please proceed.
Yeah, hello sir. Yeah, thanks for the opportunity. Just wanted to understand your thought process on overseas debt actually. So if you look at last 1 year trajectory, we are on the elevated curve only. So there is no declining trend actually which has not seen. Even if you look at the performances of the overseas, actually still at the operating level, we continue to do the losses. So what would be the rationale or what do you think going ahead down the line 2-3 years? Is there could be any opportunity to liquidate some of the assets to repay the debt, or you have to burn the cash from India earnings what we earn here and we should be able to serve the debt there?
I'll let Yashpalji answer the question, but a large part of it is translation in terms of debt that was already there. So Yashpalji, you want to come in?
Yes, sir. Yeah, I'll answer. So like in overseas, there has been a little pressure on account of the business being slow over there. So the increase in that is because of two factors. Like one is if we compare from March 25, because we have a borrowings there in overseas in USDs and euros, which are serviced in USD and euros, and we are earning in the same currencies. So directly on a realization basis, we are not incurring any exchange losses. But the euro has moved from 92.43 rupees to 105.49. And similarly, dollar has moved from 85 rupees to 90 rupees in terms of translation. So partial of the debt increase is on account of the translation losses that we have been putting to convert the same into Indian GAAP, as per Indian GAAP, because our group currency is Indian rupees. There is an increase in the debt in clear terms in USD that is shown in the investor presentation chart also. This is on account because earlier they were having the bill discounting facilities, which were classified into current liabilities, because as per the accounting standard, even in IFRS also, the current liabilities and in Indian AS also, the current this bill discounting is a part of current liabilities. But since it was a costly affair for us, because bill discounting was literally about 10% over there, the bill discounting entirely we have switched from to a clean debt in terms of WCDL. So now it is being added to the overseas debt. So these are the major two components. And some is the routine capex that we have done over there, which is not a bigger amount. It's around 18 to 20 crores in terms of maintenance and like stuff. In terms of repayment of the debt, we have been able to service the debt from there itself. As of now, we haven't remitted any money from India. The only arrangement with the bankers is that we have extended the comfort letter from India and the standby letter of credit from India. And the borrowings have been secured at overseas level. And they have been able to service their debt requirements, although there has not been a cut down in the debt. But starting April 26, once the operations are back to the track, they will start repaying their debt in a proportion of the cash earnings that they will be generating.
Okay. Thank you.
Yeah.
And the one more question, sir, actually on the overseas performance. So what is your thoughts on that for next at least for 1 year? When you are going to see the aggressive ramp up and improvement in the margins, especially? I hope all the four geographies are aluminum die casting only. So even going ahead, there is a lot of pressure on the aluminum prices which have been elevated since now. So how this kind of the losses, so you won't be able to take a pass-through agreement to repay to the clients, or how it is actually? So definitely there could be losses. What is your, just wanted to understand in that second.
Yeah, sure. So with the efforts put in place, with the changes put in place, starting April 26, the overseas should not sustain losses. This is the first thing, despite aluminum prices being stronger, because we have passed through with the customers also. But operationally, the entire operations have been, I would say, restructured. Many of the things have been put in, new things have been put in place. Some old practices have been done away with. And it's not only from the financial restructuring also, but we have done from the operational side also. So I don't think there is any reason why we should not see any improvement starting April 26 in the overseas also. So we are hopeful that starting first quarter of the next financial year, overseas will go back to the old trajectory that they used to be.
So old trajectory means tracking close to high single digit kind of the operating margin.
Yeah. Around 9 to 10% of margin starting.
Okay.
Yeah.
Okay. Thank you, sir. I'll come. Thank you.
Sure. Thank you.
Thank you. The next question is from the line of Meet from Equirius PMS. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
Yes, sir.
Yes, you are.
Yeah. So, firstly on Sundaram ADC business, what was the contribution in Q3 and how are the margins trending in that business?
So in Q3, as we informed in the earlier quarters also, that this year would be a pressure year for the Sundaram business because we are operating from a different premises. So this year it was at a break-even at the EBITDA level. And on our revenue side, it was 82 crores of revenue the business gave us. However, the EBITDA was around 5 lakhs only. So it was more of a break-even at the EBITDA level. Going forward, like April 26 or early week of May 26, we will be completing the switchover of the plant from the existing to our own premises. So starting financial year 26-27, we are expecting to, in the first year, to go back at a margin of 7 to 7.5%. And in the next 3 years to reach the level of 9.5% that we are getting in the other ADC businesses also.
Okay. And in terms of revenue run rate for Sundaram, can FY27 exceed 500 crores?
They should be around 500 crores.
Okay. And second, in terms of if you look at the product mix, so what products are housed under the other segment? So I just wanted to understand maybe a seasonality aspect or some other thing because contribution of others has decreased from 7.5% to 2% in this quarter. If I look at QOQ.
Yeah, exactly. So others are very miscellaneous products. There's a big set of other activities that we are doing, like there's a plastics business, there's other businesses also which are not classified into above 6, 7, 8 categories. So one of the reasons if you see the fall in the above category is that some of those businesses have matured and they have been, I would say, they have been merged with the above businesses. This is the nature of those businesses. But largely, it remains to be a very residual class. I would say more than 18-20 type of other businesses are there. I mean, small type of products which cannot be classified over here.
Okay. So contribution from those products will remain at around 2-3%.
Yeah, it will be 2-3% only. If that crosses around 100 crores or 200 crores of the mark, then it will be classified as a separate product in the list. Till that time, it will be forming part of others only.
Understood. So, sir, if we look at two things. First, Sundaram business turning profitable in FY27.
Yeah.
And maybe some meaningful improvement in overseas profitability, which you just highlighted. So how one should look at FY27 and 28 margins at a console level?
Yeah, sure. So I would respond in a manner like 25.81 crores we have sustained losses in overseas business, right? And another 25 crores is a loss from these new businesses and the higher side is on the Sundaram Creators one. Out of this 24.81, if you see our slide number, 5, right? So at the current levels of the P&L account, this 50 crores should add to our bottom line that we have shown in this 9 months. To be very fair side. So like we are showing a net profit of 134.84 for the 9 months, right? So in the slide number 8. So 50 crores eventually should add plus Q4 of profit. So it comes 184 and another should be around 225 something prices roughly. The rough estimates. And by the starting of first quarter, we'll come back with the new guidelines. But this 50 crores will eventually add to our margins. We are hopeful that these businesses will turn around.
Okay. Thank you.
Thank you. The next question is from the line of Aniket from CR Kothari Sons and Stockbroking Limited. Please go ahead.
Thank you once again. So my question is around the EV side of our business. Can I get a bifurcation for the Q3 and 9 months of this current year? If that's okay.
This is for the EV business?
Yes, EV.
So EV business is just starting to ramp up. So in terms of revenue base, it's at 12 crores of revenue that we have generated as of date. And the larger portion has flown in the third quarter itself. Around 5.5 crores of revenue has flown in this third quarter. Fourth quarter would be much better. As per the estimates, this would be higher. So it's slowly ramping up. But as of now, these figures are not so comparable with other business verticals that we are doing. It's a 12 crores of revenue that we have got. Yeah.
So we can say it is kind of growing, but aluminum die casting and cabin fabrication would be on the greater side of the percentage.
Aluminum die casting, the casting machining tooling and the sheet metal one. Because sheet metal we have two types of business. One is the cabins and fabrication, other is the sheet metal other than off-highway vehicles. So the off-highway vehicle will have a growth, but not up to that level with the sheet metal will have, because we have done investments more into sheet metal business compared to the cabins business. Cabins is also expecting a growth of 15-16% in the coming financial years. Yeah.
Thank you, sir. Thank you.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Chirag Jain from MK Global. Please go ahead.
Sir, just a few clarification or let's say questions around the new businesses, let's say smart clocks. We have, let's say, 2 OEMs as of now in terms of orders. So any progress in terms of how the ramp up would be and any, let's say, new client addition in that part of the business?
Chirag, from what I understand, we have 2 main customers. The rest are still to be still to take to commercial production and commercial launch for their products with smart locks in the market. The way I see it, the volumes that were projected about 3 years ago seem to be slowing down in terms of adoption because of high prices. But the ones that have been launched, while the movement and the adoption is slow, it is definitely there. We do expect that going forward, there will be more adoption, but the levels of adoption and the speed and pace of adoptions will not be as was expected 3 to 4 years ago. So in this particular year, which is 26-27, the coming year, we do expect that the numbers for this would still be less than 2 to 3% of the overall market.
Understood. And any update on the Hyundai business for the electronic mirrors in terms of SOP?
Yes. So we've got a go-ahead now. We start supplies on the 1st of April. It was supposed to be end of February, but now we've got a go-ahead for mass supplies from the 1st of April.
Understood. And just lastly, in terms of your overseas business, I think we had mentioned about few new client wins. So any update or progress on that?
Yes, we have new client wins. We also have seen that the market in Europe and America is sustainable. It's not growing as we had expected, but luckily for us, the new wins that we had in terms of substitution from other suppliers is now becoming active, and therefore what Yashpalji said will take shape in the starting from next quarter.
Understood. Thank you so much. We'll go back to the question queue. Huda?
Yes, sir. Thank you. The next question is from the line of Radha from BNK Securities. Please proceed.
Hi, sir. Thank you for the opportunity. Sir, you mentioned in your opening remarks that the commercial vehicle sales has been all-time high in this quarter. But if we compare the cabin and fabrication performance as compared to the industry sales volume, it appears to be muted. So is there any market share loss or in this cabin and fabrication department, or how is the way to look at this figure, sir?
Yeah, rather as Yashpal in this side. No? So
let me.
Yes, sir. Sure, sir. You can answer.
Oh, sorry. Radha, I'm sorry, I was on mute and I was speaking. The commercial vehicles have had their highest ever quarter 3 sales of almost 2.9 lakhs in quarter 3. But the cabin and fabrication doesn't fall into the commercial vehicle category. We call it the construction and off-highway equipment. There we believe that, because of the change in the engine norms that happened last year, the initial year, the first half and even quarter 3, there wasn't much movement, but we do see the increase in volumes and increase in orders starting from this particular quarter. So you would see that will also ramp up the way we look at how things are going to be in the quarter that we are running in and for the next full calendar and financial year.
So if we compare the four-wheeler including CV, that performance with the industry CV sales volume, so I'm not taking the cabin and fabrication, but I'm just taking two-wheeler, four-wheeler, that number. So that also remains muted. So this can be compared with the CV industry sales rate, sir?
Which one? Come again?
The four-wheeler sales, sir.
No, are you talking about our India operations?
Overall, sir, in the presentation we give verification, two-wheeler, four-wheeler, off-highway. So I'm looking at the four-wheeler sales.
Okay, let me look at that.
Okay. Yeah. So I'll just answer, sir. The breakup you are referring, it comprises of a overseas business as well as India passenger car vehicles. That's what you are referring to, the passenger vehicle, no? Four-wheeler car in the presentation.
Yes, sir. Four-wheeler including CV.
Yeah. So like if you go with the vehicles, PVs, CV, commercial vehicles, we don't have a much larger share in the commercial vehicles. So it has been merged in others, while passenger vehicles is showing separately. This is how it is 11.2% for quarter 3, and on 9 months it is 12.8%. The fall is basically primarily in India. We have Honda cars as the customer, so the volumes Honda cars are down, and as well as the overseas business is now again going. I mean, it will go back to the old levels. So once this happens, the volumes will again go back to around 15-16% as we used to have earlier.
So what gives us confidence of turnaround in overseas business in the next quarter?
The turnaround, there have been many factors, as I mentioned to the earlier participant also. At the operation side also, and in terms of the financial structuring also, in terms of their payables, receivables, that we have done a complete restructuring. The effect of will start flowing from next month onwards, because it normally takes 2 to 3 months to get the documents endorsed from the counterparty in overseas. Similarly, in operation side also, because overseas has some, I would say, strict norms compared to India in terms of the labor, also in terms of other operation aspects. So now we have been able to do the same. So that's the reason we are hoping and expecting that starting April 26, there should be a turnaround in the overseas business also.
Rather, let me also add that some of the new projects which were in the pipeline now go into manufacturing with us. So with that happening, obviously the revenue will also rise. And as Yashpal ji said, in terms of restructuring our operations, both from a financial standpoint as well as from an operational standpoint, we plugged in a lot of gaps that we felt we could with how we anticipated things to be. Those have been done. And keeping all these measures in mind, we are very, very hopeful and bullish on these operations now going back to track as to how they used to be.
Okay. Volume growth, you are expecting 15-16% in the overseas business. Is that right, sir?
Well, it could be on the overall platform and on the basis. Yes, we do believe that the volume and the revenue growth could be of that order. Yes.
Thank you, sir. That's good. The last question is on the Sandhar plant. The Sandhar revenue used to be 100 crores per quarter and EBITDA is 3-4 crores. So on a QOQ basis, you mentioned to the previous participant the numbers. So it seems that both the revenue and EBITDA has come down. While the plant was at the same premises in the previous quarter as well, then what has led to this, and by when do you expect 500 crores revenue, and at 500 crores, what margins are you expecting?
So quarter 3, the revenue and margins are down because for a week the operations were running at a very low capacity, and last 5-6 days they were shut down because TVS was also under maintenance. So we could supply them before that part period. So that's the reason the revenues have been 82.5 crores against 100 crores that we are getting in the earlier 2 quarters. Similarly, the reasons of fall in profit is also attributable to the low volumes because of fixed cost remains the same. And as I mentioned to the earlier participants, starting April 26, for 26-27, I think this plant should be at around 7 to 7.5% of EBITDA margin in the first year. And in next 2 to 3 years, it should go to 9 to 9.5 that we are getting from other businesses in aluminium die casting. Because our shifting will be completed by the end of April or the first week of May. And then we will have a full ramp up capacity in the new plant. So there is an impact of please.
Rather, there is no shortage of orders.
Yeah,
it is the constraints that we have operating from the existing facility, which is transitory. And for your information, the new plant is almost complete now. We are now fixing it up with utilities, and we are quite confident that we should be able to run trials in the beginning of April. And within April itself, we should be able to move the entire facility to the new plant.
That's great, sir. Thanks and all the best to the team.
Thank you. The next question is from the line of Maitri Shah from Sapphire Capital. Please proceed.
Yeah, hello, am I audible?
Yes, ma'am.
Good morning. Just a few questions. Firstly, on the targets for revenues for the existing business on the Indian side, we grew more than 10%, now 11.9% margins. So do you see such growth being sustainable for the next fiscal year, or are we targeting even more?
Mostly, quick answer to this is we've grown at the number that we had projected, and I see no reason why the next year and the year after that should not continue with the same rate of growth. We have the infrastructure in place, we have the orders in place, and of course, unless something unduly happens in the world, which obviously is something which we cannot control, we do believe that our highway is now quite clear and is allowing us that particular kind of growth for the foreseeable future.
Okay, that's great. And we do maintain the 12% EBITDA margin going forward as well on the existing side.
Well, we are looking, so this is a combination of margins. It depends on the average out of both our proprietary business, our aluminium business, our sheet metal business. But suffice to say that each one of these areas is looking to improve their margins. I would not be able to give you an exact number, but I can definitely say that the overall margins will improve from here on even further.
That is great to hear. And on the new businesses, we've seen a massive growth this year. What sort of margins do you expect going forward from next year? And any growth targets you have for this business on the India new business side?
The India new business side? The India new business is largely businesses which are new plants. So there's a plant that we have two new facilities that have become active in Pune. There is a new facility in Chennai, and there is of course the Sundaram Clayton business. These are things that we've defined as our new projects, which have been in initial stages. Again, there would be a hybrid of several things, but like I said, there would be a dramatic difference and an improvement in these businesses in terms of margins and a dramatic growth. You've already seen revenue go from 9 months 25 from 2.74 to 305. You would see a dramatic improvement in the revenues, and you would see an even much more dramatic improvement in terms of margins.
Any quantification on the margin side, since you mentioned that?
Like I said, like I said, it is a hybrid. For example, Mr. Yashpalji just said that in terms of casting businesses, we do imagine that the new businesses would take us from a break-even EBITDA to about 7.5% in the coming year. So in the sheet metal business, again, there have been improvements, and we will continue to see those improvements happening as we go forward. There are some elements of the EV business which are in losses, and we do imagine that in the next year, we should be close to break-even there as well. So if you were to combine, it leads up to several hybrid numbers for which I cannot give you a single number today.
Correct. Okay. Yeah, that is it from my side. Thank you so much, all the best.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Over to you, sir.
All right. With that, I think we come to the end of our question answer. I hope we've been able to satisfy. We tried to the best of our ability. Let me once again use this platform to invite you all to visit some of our plants for you to get a closer look at what we do, how we do, how we operate, and we'd be very happy to answer your questions in person as well. But for today, I want to thank Chorus. I want to thank MK and Chirag for putting this call together. I will leave you all on a happy note, which says that the immediate quarter looks extremely exciting, and the next year also looks very, very exciting with our plans, roads all ready for takeoff. With that, thank you all once again on behalf of me and my entire team here at Sandhar. Thank you.
Thank you. On behalf of Emkay Global Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect lines. Thank you.